Welcome to part 2 of our fundamental analysis videos, or as I like to call it, the Tinder of stock picking. In part 1, we looked at the great 8 filters of fundamental analysis. We used those filters and curated a list of 10 stocks that just might be a match. But how do we know which stocks to swipe left on and which stocks to actually go out with?
Oh, wow.
To narrow the field of stocks, we use a company's filings with the Securities and Exchange Commission, the SEC. Now, the SEC, or Securities and Exchange Commission, is the big brother of Wall Street. It is tasked with regulating all publicly traded companies. In doing so, it forces the companies to file certain disclosures. Disclosures about management, disclosures about salaries, disclosures about earnings, disclosures about litigation or investigations. Think of it as a one-stop shop for everything you want to know about a company. And that's where we're going to begin today to make our match. Now, the SEC filings are probably the cure for insomnia. These are some of the most boring documents ever. I should know. I used to actually have to draft them when I was a corporate lawyer. Now, they're also very helpful, though. In the old days, we would have to spend 50, 60, 70 hours reading through every document, every filing, just to pull out one nugget of information.
Okay, Boomer.
Or we could spend tens of thousands of dollars hiring an analyst to do that. AIH has taken all that away and gotten it down to about a 2-minute project. Woo! So all we need to do is take our great 8 filter curated list, add in a really detailed prompt, and we will generate the same analysis that it would have cost thousands of dollars to do beforehand. And that's what I'm going to show you how to do today. But before we do that, we've got to go into some of the boring stuff. I'm going to try to keep it as short and as entertaining as possible, but you got to stick with me on this. I need you to at least understand what these reports do. So I promise you will not need to read these reports unless you drank like 16 gallons of coffee and need to sleep. But you will need to understand what they do and why they're important. So let's get on to it so we can start picking some stocks.
This incident led to the creation of the SEC, signed by the late President Franklin
Fun
D.
fact,
Roosevelt. Now that we know
the
that,
first commissioner of the SEC was probably the greatest market manipulator ever, and was also the father of John F. Kennedy.
We're talking about the Form 10K. I'm sure you've at least heard of this by now. This is what Warren Buffett reads for fun every day.
So this is basically an annual report, but much more boring and much more jacked up.
Financial condition, which is submitted annually. But this is not then.
Don't get too lost with the financial statements. We're going to do a whole series on financial statements in the next few months.
Financial statements include. Next up, we have the Form 10Q. Form 10Q is basically a shortened
Not sure what to make of
10K,
that
which
picture.
is filed quarterly. But unlike Form 10K,
Creepy.
financial statements in 10Q are unaudited, which means it is not yet checked for accuracy. In addition,
means it could be full of crap.
Required in Form 10Q is less detailed.
Wow, that was boring. But it's also very important. So let's take a step back. The SEC requires that every publicly traded company, once per year, issue an annual statement that outlines the business, the risks, the performance, the management results, litigation, and several other items. That is what is called the 10K. The SEC also says, well, once a year just isn't enough. We want you to give us something quarterly as well. That's the 10Q. Q for quarterly. That's the way I always remember it, at least. Now, the 10Q, you want to think of it as almost like a mini 10K. It has pretty much all the same information, but it is more of a catch-up from what happened the previous quarter, whereas the 10K is a one-year summary. So I want you to think of the Q as a quarterly analysis and a report card that you would get maybe at the end of the first marking period, whereas the 10K is your annual report. Now, also the 10Q's financial statements are not audited, meaning that there could be some accounting irregularities in them, so take those with a grain of salt. Now, the final reporting filing that we want to talk about is the 8K. The 8K is what is filed when a company has some sort of a material event. So that could be a change of ownership, that could be a change of management. So to summarize, you've got these 3 mandatory disclosures. The 10K, that's the annual. The 10Q, that's the quarterly. And the 8K, that's basically anytime there's any sort of material event. Each one of them are meant to keep the corporations honest and keep them disclosing everything that's important that's happening to the company, to the public in an accurate and timely way. Got it? Good. Let's move on to the next one.
If you want to know how much the company management officers earn and the perks of being part of that company,
this is where you determine whether or not the place is being run by a bunch of momos and numbnuts.
Prior to the meeting of shareholders, there's a purpose of
we'll get into it. Don't even worry about voting on a proxy statement.
Usually,
most of these are rigged
per share. Proxy statements, which are required by the
SEC, let you know if management's actually worth its salt and what they're getting paid,
so they can make informed.
All right, let's talk a little bit about the proxy statement. This is your governance document. This is the document that's sent out to allow you to vote your shares. I'm not going to get into share voting because the vast majority of votes are already essentially rigged. Management controls shares. Management knows the people that control the shares. You and I are not going to move the needle and change a company. So the proxy will give you a breakdown on every director, so every member of the board of directors, and every officer on the company. It gives you their compensation, their history, their qualifications. This gives you insight into the people with whom you're parking your money. These are the people you're trusting with your dough. So it stands to reason you're going to want to know if there are a bunch of morons who don't know how to do their jobs. And that's part of what the proxy statement will get at.
Let's move on to forms 3, 4, and 5.
We've already
Corporate
covered
insiders
most
are the
of
ones
this.
who are required to file these forms.
I'm not going to spend a lot of time on the Form 4s. It was one of our great 8 filters of fundamental analysis covered in part 1 of this video. I will drop a link in the comments so that way you can take a look. But needless to say, the Form 4 is our CEO lie detector test. That is the document that tells us whether or not our CEOs, our officers, our directors, our insiders are dumping their shares or buying shares. Now, one of the forms that was overlooked in the video we just watched is the Schedule 13. The 13D is required anytime someone becomes a 5% owner or more of the company. Also, that person is required to disclose why they're buying those shares. Boring. I'll tell you why that's interesting. 13Ds will need to be filed by what's called an activist investor. An activist investor is someone who's trying to get enough shares to get on that board of directors to influence management and change how the company is run. Or it could be someone looking to buy the company or enter into some other merger and acquisition transaction. Now, that person, if they decide to dump those shares, will file what's called an amended 13D. And that lets you know that they're not interested anymore. Perhaps you shouldn't be interested anymore either. So it's very important to look at the 13Ds and see who's filing and see what's going on. It gives you a sense of where the big boys are playing. Now, speaking of that, the 13F is an annual filing that larger, what we call whales, will need to file. So that's your hedge funds, your pension plans, your mutual funds, and it's a disclosure of all of their long positions. A long position is just fancy Wall Street speak for they're not betting against the stock, they're betting on the stock. And that's important to know because these institutional investors are the ones that can really move the needle on a stock.
Oh, yeah.
When they start buying, that's what pushes the price higher. So it's very important to check out the 13Fs to see who's into these stocks and to see if they're buying or selling. Because that will give you a sense of which direction this thing's headed. And remember,
the trend is your friend.
Now you are at least well versed in the SEC filings that matter with respect to picking stocks. This is the age of AI. So we can make AI give us these answers on the quick and for no cost at all. And that's what we're about to do.
Fun begins.
All right. We have now gone through the 10Ks, the 10Qs, the Schedule 13s, the proxies. Back in the old days, when I was getting started, you would have had to read each one of these damn documents. And if that didn't cure your insomnia, absolutely nothing would. But we live in the AI day and age. We have the ability, the skill, the power to do all this heavy lifting, to all this filtering, to do all this analysis. That which would in the old days would have taken 20, 30 hours or cost thousands and thousands of dollars on analysts. We can do that within a period of a few minutes. And I'm going to show you how.
Brilliant.
So, log on to your favorite chatbot. I'm using Gemini, but it really doesn't matter which one that you use. And I want you to enter in the following prompt. Here's the role I want you to take. I want you to act as a senior equity analyst specializing in fundamental analysis. Have a list of 10 stocks listed below that pass my initial Great 8. Remember the Great 8 filters of fundamental analysis? Well, that's what we're using them for now. I need an in-depth financial and qualitative autopsy of each company to determine if they are a buy, a hold, or an avoid. And for each company, please analyze the following SEC filings. The 10K and the 10Q. Analyze the management decision analysis. That's the MD&A section we were just talking about. Is revenue growth organic or is it driven by acquisitions? Are margins expanding or contracting? Highlight any risk factors that just aren't boilerplate. Then go to the proxy statement. Check the executive compensation. Is management's pay aligned with shareholder returns? Do they own a significant amount of stock personally? Go over to the Schedule 13D filings. Are there any whales or activist investors looking around? Are there any recent 13DA filings that indicate a change in intent? So that's where we're looking to determine whether or not an activist investor is now becoming passive and whether they're dumping their shares. Finally, let's go to the 8K. Have there been any recent material events going on? Now we're going to hit enter, and we're going to see what magic comes by. Oh, look at this! We've got our bull cases. We've got our bear cases. We've got red flags and problems. We've got recommendations on whether it's a buy or a hold. Do you understand the level of analysis that this is? This would have cost us thousands and thousands of dollars on hiring an analyst, or it would have taken countless hours of reading and making notes and going back into the financials. All this done in only a few minutes. There is no reason why you can't make money with this. All right, everyone. We are now armed with all the information and data that we need to swipe left or swipe right and make that match. For those stocks that you're going to swipe right on, well, the next step is to figure out what your entry point is. And to do that, we use something called technical analysis. And it just so happens that the Hostile Takeover's got an amazing video on technical analysis. I'll drop the link in the comments. All right, time for our recap before we close it out for the day. We've got the 10K, the 10Q, and the 8K. These are our disclosure documents. This is what tells us what the company is earning. This is what tells us when there's material changes. This is what tells us where the risks are. Then we got the proxy statement. This is the document that tells us whether management's a bunch of morons or not, and whether it's worth us parking our money with these idiots. Then we got the Form 4 and the Schedule 13. This is what tells us who's buying these shares, and whether or not we want to piggyback with them. That's it, folks. We have covered a lot of ground today. So, thank you for staying with us. Thank you for watching. Like and subscribe, and we will see you next time.